Okay, well, welcome to today's Payday Super webinar. The session will be fairly general rather than in detail because all of your circumstances will be different. But myself and Julie will help guide you through what we know to date and what is upcoming, and importantly, a couple of steps before 30 June. Obviously, big disclaimer, we don't know all of your circumstances personally. Uh, the advice today is general in nature, not specific advice. You need to consider your own position and particular circumstances before making any decisions. But hopefully, the information that we will provide will highlight the things that you may want to know. So my name's Adam Ramage. I'm an associate principal at the Geelong office of Wilson Pateras, Canny Group, and joining me today is Julie Pullen, our senior bookkeeper, who manages our team of bookkeepers here in Geelong. And Julie's eminently situated to have the hands-on experience with payroll day to day. So I won't put too much pressure on you, Julie, but thank you for joining us. And
Thanks, Adam.
hopefully the clients appreciate your wisdom.
Thank you.
So what we're going to go through today is the agenda is firstly, what is Payday Super? There's been a lot of communication around it. Why the change, the key dates, what is actually changing because it's not just Payday Super. Qualifying earnings is a new term and we'll explain what that means. The changes to SuperStream, superannuation guarantee charge reforms, penalties that potentially apply under the new regime, the small business superannuation clearinghouse, what's happening with that, action steps for you and for us, and how we can help. Now, although agenda item 12 says questions and answers, we think that it would take up everyone's time if we tried to deal with every question today. So we'll ask you to reach out to myself, Julie, or your accountant or your bookkeeper. And note that there'll be certain areas that within, if you're dealing with payroll software, that we can't actually do some of the functions in there. That'll be required on the business owner. So we'll get to that later. I'll hand over to Julie now for the next slide.
Thanks, Adam. So, what is Payday Super? It's a landmark reform to Australia's super system. From the 1st of July 2026, employers must pay the super guarantee at the same time as the salary and wages, i.e., on payday. So, the super rate will be 12% as per this current financial year. The deadline to make the super payments will be 7 days from the day the payroll is processed, and this is effective from the 1st of July 2026.
So why change? Well, the main reason for the change is to protect employees' entitlements. So unpaid super, there's been issues of years of unpaid super, and the employees having to go through a long-winded process to be able to get that back. So the idea is to protect those employees' entitlements, reduce the non-compliance of employers who haven't been paying super either on time or at all, and also align with the modern payroll technology that we have today with the new payments platform and removing the need for a quarterly lag. Over to you, Jules.
Key dates and timelines. On the 1st of October, the Small Business Super Clearinghouse closed to new users. On the 30th of June 2026, that will cease entirely. So if you are currently using that, you will need to find another alternative as soon as possible. 1st of July 2026, Payday Super commences, which means super must be paid on payday. And from the 1st of July 2026, ATO assesses SGC, which was previously self-assessed by the employer.
Importantly, you can start paying super on payday right now. You don't have to wait. And just note, with the small business superannuation clearinghouse closing, you need to have your solution set up before 1 July, before that first super payment comes due.
And you also need to download the data from the Small Business Super Clearinghouse, Adam,
Great
before
tip,
it
Julie.
closes,
Great tip.
or you'll lose it all.
Yes. Okay, so before and after. So before or pre 1st of July 2026, the payments were quarterly, due by 28 days after the end of the quarter. Now the payments are due on payday. And as Julie pointed out, there's 7 days for the payment to reach the fund now. So the new payments platform is what's going to facilitate those payments going through quicker than I know at the moment. The payroll softwares will be saying, oh, you need to, if you want to make sure that the superannuation is with the fund by the 30th of June, it should be paid by the 20th. Now that the tax office is working with the providers and utilizing the new payments platform to bring that down to 7 days. The one different new term that we have to deal with, apart from Payday Super, is qualifying earnings. So the superannuation guarantee is now calculated on qualifying earnings, not on ordinary time earnings. We've got a slide a little bit later that talks about what that qualifying earnings contains. The fund receipt deadline, again, 7 days. Superannuation guarantee charge. Previously, you had to self-assess, complete forms, receive an assessment. Now the assessment will be made automatically by the ATO. The SGC interest was 10% per annum. Now it's the GIC rate, which is less than that, but it does compound daily. Penalties previously up to 200% of superannuation guarantee charge. Now we're looking at 25 or 50% of unpaid superannuation guarantee charge. The STP reporting, it did only report on ordinary time earnings or the super liability, and now both qualifying earnings and the super liability are reported through single touch payroll.
Qualifying earnings, which is a new concept. What qualifying earnings includes is ordinary times earnings, salary sacrifice contributions, other salary and wage amounts currently included in SG base, and bonuses. The key difference from ordinary time earnings is qualifying earnings is broader than ordinary times earnings because it includes items such as salary sacrifice. Um, it's calculated per pay period, not annualised, and it reduces the risk of underpayment through salary structuring.
Okay, so the payment deadlines under Payday Super. For new employees, there are extended time frame for when you bring a new employee on for the first time, allowing time to make sure that you can verify the fund details. There's new processes in place with fund verification where an employer can go online to try and verify that fund up front. Member verification requests, where an employer submits a member verification request, an extended period applies while the fund responds. So the funds have committed to responding faster on that. And fund returns and errors, where a super fund returns a contribution due to incorrect data, employees have additional time to correct and resubmit that data.
Which is really important, I think.
Mm.
SuperStream upgrades from the 1st of July 2026, near real-time payments. So as Adam explained earlier, the payments are going to be processed a lot quicker than what they are now. Member verification requests. So there's a new capability for employers to confirm that a super fund can match and accept a contribution for an employee before the first payment. This one's really important for me because I set up a lot of new employees in client files for payroll and our member number's incorrect or the super fund ABN is incorrect and the payments bounce and it takes forever to get the correct information. So I think that's a really good feature. Faster fund allocation. Funds will have only 3 business days down from 20 to allocate or return contributions. Improved error messaging. So faster error notifications so employers can resolve data issues before the 7-day deadline. The fund validation service. Early warnings about key fund changes, mergers, closures, bank detail updates. Another really important feature because a lot of super funds merge at the end of the financial year and there's changes to super fund details, and stapled fund at onboarding. So employers can simultaneously request a stapled fund and offer it to the employee at the point of providing a choice form.
Thanks, Julie. So the new superannuation guarantee charge, if the super isn't received within 7 days, the superannuation guarantee charge applies. It applies on the shortfall amount calculated on qualifying earnings, not just salary and wages. It's a daily compounding interest, compounding, so it's more punitive than the previous flat rate of 10% per annum because it compounds daily. There is an administrative uplift, which is variable based on the employer's compliance history, and it can be reduced by voluntary disclosure to the ATO. Importantly, tax deductibility. Unlike the old superannuation guarantee charge, the new superannuation guarantee charge is tax deductible, which is a significant change from the current regime.
Uh, Adam spoke about the penalties, old versus new, in the previous slide. So just briefly, under the old regime, it was up to 200% of the SGC. New regime from the 1st of July 2026, 25 or 50% of unpaid SGC. Specifically, 25% for first-time non-compliance, 50% for repeat offenders, and it's ATO assessed, not self-reported anymore.
And I'm sure that no one on this webinar would be a repeat offender, so 25% for the first time non-compliance. Okay, Small Business Superannuation Clearinghouse, as we previously pointed out, it actually closes 30th of June 2026, so it's not available from 1 July when Payday Super comes in. Payroll software with SuperStream capability or a commercial clearinghouse are your alternatives to that. And as Julie pointed out, don't forget to download your data.
All right, single touch payroll reporting changes. What single touch payroll reports now is ordinary time earnings or the super liability through single touch payroll. Quarterly reporting aligns with quarterly payments, no real time visibility for ATO on fund receipts, and employer self assesses and lodges SGC statements for late super. From the 1st of July 2026, STP will report both qualifying earnings and super liability through STP. Every pay event will trigger a super payment obligation. Very important to remember. ATO matches STP data versus fund contribution data in near real time. And ATO assesses the SGC, so no employer lodgement will be required.
Okay, now we've got a couple of slides on the software that most of our clients will be using. Uh, Obviously, we're still in that final month of pre Payday Super,
Preparing.
so there's changes happening as we speak. But I'll get Julie to run through the next few slides for us.
These are just, as Adam said, things I've become aware of lately. And every day I log into BIOB QuickBooks Zero, things are changing. So I'll go through the software and what we can see at the moment and what you can do at the moment. The first one is QuickBooks. A lot of you will already have Beam. Beam processes the super in QuickBooks. You can continue to use that. However, there's a new function in QuickBooks called Hero Clear. It streamlines the whole process. It will require the owner to set up by clicking the link, entering their own data for a two-factor authentication, entering their bank data for a direct debit super payments. Very streamlined. So we're here.
Do you think they called it Hero Clear, Julie, because we know that all of our small business owners are heroes for embarking on the joy of
Embarking,
running in their business?
correct. Yes, let's go with that. I did assist a QuickBooks client with setting up Hero Clear the other day, and that's how I know that it has to be done by the business owner. But the client was very happy with how it looks now with processing super. So if any of you log into your QuickBooks file and see that Get Started button, please click on Get Started and get the ball rolling and get your QuickBooks file set up. Next one is Xero. Xero doesn't have as much live Payday Super set up, ready to go, so to speak. But what they currently have is a little box asking you to go and review your qualifying earnings. So obviously with Xero, you need to assign your qualifying earnings ready for Payday Super. For most of you who set up single touch payroll, the original single touch payroll phase one in your Xero files, very similar to that, where you need to map your pay items so they report correctly. My understanding is once that is done, there will be another step with a registration process for Xero. So again, if you see a pop-up asking you to review, get ready to set up Payday Super, don't be afraid to click on the link. Very, very user-friendly, easy to follow. Just follow the steps and complete it. And get your file ready sooner rather than later. MyOb seems to be a bit further ahead than the other two, which surprised me a little bit, to be honest. Um, MyOb is basically, from what it appears, is all ready for Payday Super to be set up. I did try and assist a client with this yesterday, and again, it's how I know that the business owner needs to do it because I didn't have the level of access. Um, so it's as simple as going into your payroll section, clicking on Super and clicking the link, sign up to Payday Super. Again, just follow the prompts with your information, set up your two-factor authentication, a bank account for payments, and I believe it's as simple as that. But again, any little links that you see when you're logging into MyOb, if it refers to Payday Super, please click on it and get your file ready to set up.
And
Uh, bit more information on what to do
yeah,
with MyOb. Check your employee details once you've clicked the
yeah.
Set Up Pay Super. And I believe that's all you need to do in MyOb. But we'll soon see.
Okay. So I would assume in all softwares, the characterization of qualifying earnings will be required. Okay, so action steps. What you need to do now. Confirm your payroll platform reports Payday Super. The new payment platform payments, updated single touch payroll reporting, and qualifying earnings calculations. Transition away from the small business superannuation clearinghouse. If you're still using it now, get your skates on. It's time. Verify your employer super data. So obviously, we don't want with 7 day timelines on us. We don't want to have errors bouncing backwards and forwards. So verify your employee super data now. If you do have team members who are salary sacrificing or you're paying bonuses to based on ordinary time hours, then you need to understand what qualifying earnings means and how that's going to impact your superannuation obligations. Number five is the most important from a cash flow point of view. So we're going to have Q4 2026 superannuation payment due on the 28th of July. But before that, we're going to have whatever pay runs have occurred between 1st of July and 28th of July. The superannuation on those will also be due. So there will be a cash flow impact of Payday Super. It's a cash flow impact rather than a profit or loss impact, but it's important that you prepare and make sure that, as Julie's just explained, you're setting up bank details for the direct debits. You need to make sure that the funds are going to be available in those bank accounts for each payday. Uh, and number six, talk to Wilson Pateras. Yes, of course, and it's dobbed Julie and myself in, and we know that there's only going to be limited time in July to help clients. So please contact your accountant, contact your bookkeeper, make sure that you're comfortable with your setup for 1st of July sooner rather than later. Do you want to go through that slide, Julie?
Sure, how Wilson Pateras can help. Uh, we assess your current software and processes for Payday Super compliance, employee data audits, verifying fund details, tax file numbers, and member data to prevent payment failures. Small Business Super Clearinghouse transition support. We can help you transition to a SuperStream compliant clearinghouse before June 2026. And qualifying earnings and single touch payroll advisory, calculating qualifying earnings and updating STP configurations ahead of the deadline, which, as I explained in most of those software slides, it's all kind of set up for you just to tick the boxes basically to assign the pay items or the qualifying earnings to the correct reporting category.
And the all of those four we can help you with. The one thing that you do need to be aware of is if your payroll provider or the system that you're using to do your payroll doesn't have a payday super compliant function, then transitioning to another compliant clearinghouse is really important, and that's something that is likely to need your impact. There's only a certain amount that myself and Julie or your accountant or bookkeeper can do. So you need to, if that's something that you do wish to do, then you need to be aware that it's going to need your impact as well. Okay, so um, I'm sorry that we aren't going to run a proper question and answer session, but if you do email any inquiries through to inquiries at wilsonpateras.com.au, contact your bookkeeper or your accountant if need be, and we'll get back to you with how we can assist and the steps that we see that are required. As Julie pointed out, QuickBooks and MyOb are ready to transition. Xero is not quite ready to transition, but it is ready for you to clarify your qualifying earnings. So I think that's it from us. And yeah,
Yep.
from on behalf of myself and the team here at Wilson Pateras and in particular the Geelong office, thank you for taking time out of your day. And Julie, a big thank you to you for participating and sharing your wisdom.
Thank you. Thanks, Adam.
Thanks, everybody. Have a good day. I'll end the webinar now.
Bye.